Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the trading week of April 7th through April 11th. We're in part 2 of our weekly trading game plan. We'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and several option strategies to generate income while we wait for our swing trading stocks to set up. So let's get started. So here's our Google document with our notes for part 2 of our weekly trading game plan for April 7th through April 11th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to trade our swing trading stocks, etc. If you have not already seen part 1 of our weekly trading game plan for this trading week, titled Trading Trump's Trade War, we would highly recommend that you also view part 1, as that contains our market analysis, our trading strategies, trade ideas for this trading week. We keep all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for part 1, as well as previous weekly trading game plan notes. And you can also find a direct link to that Google Drive folder in the description box below. Welcome Fairchild, Gabe Paid. Hope you had a great trading week and all doing well. So firstly, we'll go over our trade updates, and then we'll look at the charts for these trades in Webull. So firstly, we went long METC Ramaco Resources. We've been watching Ramaco Resources for some time. This is a coking coal and rare earth materials play. You can get more information about why we've been watching Ramaco Resources, METC, via the links to the videos in the notes. We went long on Friday on the 4th, and that decline in the market. We bought in at 701, and this is a US-based coking coal, so steel production, and also they're starting to produce some rare earth elements. Again, a US-based company, so my humble opinion may benefit, from domestication of those products, domestication of steel production, and also rare earth elements. So again, we've been watching this for a while. Went in at 701. If you got our trade notification, you might have been able to get it slightly cheaper. I think there's still an opportunity to get METC at a cheap, reasonable price. Secondly, we went long on SVXY. SVXY is the leverage short on the VIX. When we got that spike in the VIX, I think it went up to about 45.61 or so. I always say, again, this is one of my favorite trades. When the VIX pops, spikes, we go short the VIX with SVXY. As the nature of the VIX is, it will retrace over time. So, we've had several discussions about using various leverage short VIX products, SVXY, SVIX, SVOL, which is a monthly dividend payer on volatility, and you can access all those videos via the links in the notes. We also had a question in our Discord in the ETFs group about our position on our ideas on SVIX or shorting volatility. So Gunslinger watched our SVXY video, was asking about the risk reward looks pretty good, shorting volatility. So again, that was our strategy. When the VIX pops, we short the VIX, and our preferred product tends to be SVXY, although again, we have all of these volatility ETFs in our ETF Google Sheet. You can pick the one with the risk reward profile, the composition that you prefer. And again, you can hear our previous discussions on SVXY versus SVIX and SVOL via the links to the videos in our notes. We got into SVXY at 36.52. Again, if you got our notification of when we entered the trade, might have been able to get that a little cheaper as well. We'll see if we get a higher spike in the VIX early this week, or if it does start to collapse, if the fear starts to abate. Well, we did see in the term structure yesterday that the current VIX is significantly higher than the term structure, and the term structure is currently sloping down. It's in backwardation, so we do expect this to the VIX to retrace back down, and we'll scalp off this position in SVXY. Welcome, Sydney Osborne, RT, Ricky Khan. Thank you all for joining us today. Thirdly, we went long on USOY. USOY is a monthly dividend payer on oil. We saw that steep decline also in oil based on recession fears. We've been watching USO and USOY, which USOY is based on USO. So when that dipped down to its 52-week low, that was our triggering event to go long on USOY. We can sit in that, collect a monthly dividend while we wait for oil to swing back up. Again, you can hear our thesis and several discussions of USOY, our strategy on swinging oil back up, via the links to the videos. Just a quick reminder, although I don't ever recommend anyone blindly follow us into or out of trades, it would help you make money trading, help you succeed in your trading career to be notified when we enter or exit a trade. You can get real-time notifications when we enter or exit a trade by joining our Patreon. You can also hear how you can use our trade alerts to help you make money trading, help you succeed in your trading career via the link to the bonus video in the notes. We also have several additional alerts channels in our Discord available to our Patreon members. Additional alerts to help you make money trading that I'll briefly show you that you can get access to by joining our Patreon. So firstly, I have a Thinkorswim TOS alerts channel in our Discord. I set up price alerts in Thinkorswim. When those get triggered, they get automatically posted to our Thinkorswim alerts channel. If we follow those up with a trade, like when we got the trigger on the SVXY hitting its 52-week low, and that was our trigger to go long on SVXY. And then I'll reply in that Thinkorswim channel with our actual trade. The trade not directly related to a trade alert or a Thinkorswim price alert, and we'll post those in the trade alerts channel. So like when we went long on METC, when we went long on USOY, so we'll post those in the trade alerts channel in our Discord. Finally, we have an alerts channel with alerts generated by our automated systems, real-time alerts when stocks are moving up, breaking out near our support price target levels. You can also get access to that by joining our Patreon, and you can get more information about how you can use these real-time alerts when stocks are moving up, breaking out, to help you make money trading via the link to the video in our notes. So our real-time alerts are also a great source for shorter-term traders, day traders, scalpers. Also shows you sector rotations, reversals, and sentiment in the market. So we can see when SVXY was near our buy target, TNA, the bull on small caps, coming down, get SVXY, APOY bottoming, 52-week low near our price targets, etc. So again, another source of information, alerts for any type of trader. You can see sector rotations, reversals in the market, trends in the market, etc. in our real-time alerts channel. Welcome, Aura Alpha, Katon. Thank you for joining us today. Hope you're doing well. So if we very quickly look at those trades in Webull. So firstly, our METC, Ramaco Resources. So again, we see in that steep decline, the sell everything market we had the end of this week created some opportunities in some of these stocks we've been watching for a while. So we see that steep breakdown in METC. Again, we bought METC at 701. Again, if you got our alert, you could have gotten it at a cheaper price, maybe at 650 to 651, and we could see it's starting to rebound already late on Friday. So hopefully we'll get a nice rebound back up in that high 11 area. But either way, we'll protect our profits. So we've got a downtrending market. So as soon as that gets profitable for us, we'll get a reasonable stop. Using these support and resistance levels, so we'll stay at least one, if not two, pivot points below the current price, and then protect our profits that way. SVXY, again, short on the VIX, so it bottoms when the VIX spikes. So we got in, what, at 36.52 or so. If you got our alert, you might have been able to catch that bottom, but again, you have to be very nimble to catch the very tops in the VIX, the very bottoms in SVXY. And we can see that's already starting to rebound a little bit. Again, we'll see if we get a more panic early this week after the weekend. I haven't heard any significant news, maybe EU tariff retribution announcements, so we might get a further spike in the VIX. Might be able to get into SVXY even cheaper, but then eventually it should retrace back down, and then again we'll protect our profits, scalp off that profits as the VIX retraces to around 20 or so, maybe below. USOY, again on oil based on USO. So again, we saw that steep drop in oil down to near 60. So that was and USO broke down. I think it was 52-week low was about 66. When it broke that 52-week low, that was our trigger to jump into USOY. And we got into USOY at 1052. So you can see that's already rebounded some. So again, we'll get our stop in there based on the pivot points for Monday, but no rush to get out. We'll collect our monthly dividend, lower our cost basis on USOY, and wait for oil to swing back up, and then rinse and repeat. So I hope that all helps. Okay, let me grab a quick drink, and then we'll go over our top swing trading stocks to watch for this week. Okay, just a quick reminder, if you're not already using Webull, you can still get 20 free fractional shares of stock by opening and funding your account with as little as $500. Each fractional share of stock worth $3,000 to $3,000. You'd use our affiliate link in the description box below. You get all your free fractional shares of stock, take advantage of any other promotions they may have at this time, and also help support our BeachBum trading community, all of which we greatly appreciate. We'll talk about our updates here to our top swing trading stocks to watch list, and then we'll look at the charts for those in Webull as well. You can also see you can trade 24 hours a day, 5 days a week, overnight trading in Webull. You can get more information about that via the link to the video and the Discord posting in our notes. So when you saw that panic on the announcement of Trump's trade war tariffs, a possible opportunity to get some cheap stocks overnight on that panic. So take advantage of that using Webull. Don't have a whole lot in our top swing trading stocks to watch list, as again the market's in decline, big gaps down, so we don't really know where the bottom for swinging anything long. So for example, I took off FBY. FBY is one of the yield max ones we like to trade with a positive total return. We still have it in our shopping list, in our watch list Google Sheet. We also have it in our Dividend Payers Google Sheet. So we can watch these various yield maxes that we like in our shopping list as well as in our Dividend Payers. So I didn't need to leave that in our top swing trading stocks to watch list or our Google sheet. I did leave METC. As we saw, METC is a little bit below our buy-in price. Looks like you can still get a reasonable price on METC, Ramaco Resources. So I have left that in our top swing trading stocks to watch list and in our watch list sheet in our watch list Google sheet. Again, you can hear our thesis on Ramaco Resources via the link to the video in the notes. Others we're watching in our shopping list sheet in our watch list Google sheet, and we'll keep an eye on these yield maxes. Once the market does finally bottom, there's a number of stocks we have in our shopping list that we might be interested in going long on. As you can see, we already went long on USOY. Again, so we'll be using our shopping list. Once the market bottoms, look for the best opportunities with the best risk-reward profile, the best total return in terms of dividend payers, and then we'll be buying off of our shopping list once the market finally bottoms and swings back up. Also, yesterday we talked about a lot of the inverse ETFs as a great way to play the declining market, the trend, the momentum in the downtrending market. So if you want to trade that downtrending trend, the momentum, downside momentum, yesterday we talked about a lot of the inverse ETFs that we have in our ETFs Google sheet, and those again would be great for trading a bear market. We talked about that all again yesterday. Again, we use our watch list Google sheet to watch our top swing trading stocks to watch, as well as our bullpen stocks, our shopping list stocks, etc. This gets automatically regenerated at the end of each day with any updates to our top swing trading stocks to watch, bullpen, shopping list, etc. And you can get 24/7 access to our watch list Google sheet by joining our Patreon. We also have a whole series of videos on how you can use our watch list Google sheet, help you make money trading, how you can use the PE and ATR, our price targets, buy at, sell at, etc. So here's our watch list Google sheet. Again, right now, the only one in our top swing trading stocks to watch I've left is METC. See, METC's at 684 right now, bottom was 651. You can see the risk reward profile. Their dividend, it is a dividend payer, so you can get the ex-dividend or the dividend information. This one is optionable, so you can get the optionality information as well as the PE and the ATR to help you set stops and or take profit price targets. Welcome to Crow. Thank you for joining us. Hope you had a great trading week and are doing well. So we already looked at the chart for METC, so I don't really need to look at that one again. We'll go ahead to our bullpen stocks. If you're new to our community, the concept of the bullpen stocks are ones that may not have set up to warrant inclusion in our top swing trading stocks to watch right now, but I've identified that they may in the near future. So we put them in the bullpen. If their setup improves, and we put them in the game, move them up to our top swing trading stocks to watch list, like we did with METC on the 13th. So that's when we had our bullpen. We moved up to our top swing trading stocks to watch on the 13th. I guess that's probably the 3rd, and then bought it on the 4th. And if the bullpen stocks run away or break down, then we just take them out of the bullpen. So the first one we've had in our bullpen for a while is GigaCloud Technology. This is a technology stock, profitable technology infrastructure stock. It has held up pretty good considering it's not a very large cap technology stock. So this might be one that might hold up in the market decline. See, it was a double bottom in FinViz. You can hear our thesis on GigaCloud Technology via the links to the videos in the notes. and we took METC out, put it in our top swing trading stocks to watch list, and we are already long METC. Took Tatron Components, again, very small cap, low float stock. Had it in the bullpen for a while. It finally did break down with the sell everything market we've had. So that one's broken down. So we took that out of the bullpen. We can always revisit that again in the future. Another technology infrastructure that we've been watching in our bullpen that's held up pretty well is USIO Inc. And this is another software infrastructure technology stock. You can hear our thesis on USIO via the link to the video in the notes. And you can watch our bullpen stocks in the bullpen sheet of our watch list Google sheet. And we've got our price targets. You can see the 52-week low, buy it, sell at, whether it's optionable, if it has a dividend, ATRs and PEs. So again, easy to watch these 20, during the market trading hours, and trade off of our bullpen sheet as well. We look at our bullpen stocks in Webull, and Webull's nice. You can have all kinds of different watch lists. We'll also talk about having a shopping list, watch list in Webull. So here's GCT. Let's see, it did break its previous low, which was about 1240. Did rebound pretty quickly. So it had a long wick down, rebounded back up to that 1240 level pretty quick, headed back up. So this one might be one that's going to hold up in this down market. Similarly, USIO. Its previous low was about 120 or so. See again, strong wick down. Buyers came back in, pushed it back up, and then swung back up. So again, another technology infrastructure that seems to be holding up pretty good in this down market. So one of those or both of those might be of interest to you. We'll see if they continue to hold up. If so, if you want a reasonably small cap technology stock, you can take a look at GCT or USIO. Okay, I have not revisited our honorable mentions this week, so some of these we might want to take off if they've broken down. But again, you can see we've identified previous double bottoms, multiple bottoms, etc. We talked about, and we're watching several of the international markets. We talked about those yesterday. The tariffs assigned to some of these, Thailand, Malaysia, Indonesia, etc. So we'll have to watch what the impact of those, which of these hold up. Again, you can do that in our ETFs Google sheet. In Malaysia. So you can take a look at some of the honorable mentions, see if any of those might be holding up, might be of interest to you. Okay, let me grab a drink and we'll talk about our shopping list, take a more detailed look at our shopping list stocks. Okay, again, we always recommend that you have your shopping list of stocks that you want to buy ready for just such a rapid decline in the markets that we saw at the end of this week. So it's your opportunity. Take advantage of your shopping list stocks. So you see we're mostly trading off of our shopping list right now in this declining market. one that I added to our shopping list so we can watch it more easily also in the future without having to put it in our watch list. It's SVXY. Again, this is my favorite one right now to trade the VIX short. So we put that in our shopping list so we can watch that as well. Again, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education, hopefully some minor entertainment purposes only. But again, we recommend you beware of, stay away from zombie stocks, zombie companies, zombie ETFs. Again, we don't expect the Fed to cut rates. I don't expect the Fed to cut rates anytime soon. Saw that steep decline in the market. It's going to put a lot of pressure on these money-losing stocks. They're going to have a hard time raising funds. We also saw some IPOs getting delayed. So again, these money losers, I think we're going to see a lot more of them disappear, get delisted, have to do offerings. They're going to have trouble doing offerings, having trouble raising capital. So again, our humble opinion, stay away from those. If you're concerned about stock going bankrupt, becoming insolvent, having to do an offering, having to do a reverse split, you can calculate their quarter's cash flow positive using our biotech due diligence Google Sheet. Or not just biotechs, but any money-losing company. You can see how many quarters till they run out of money. And you can get access to our biotech due diligence Google Sheet also by joining our Patreon. So again, we're mostly focused on our shopping list, and we have our shopping list stocks in the shop list tab of our watch list Google Sheet. You can see we're watching, a number of the yield maxes on the Mag 7, so AMZY, and recently we scalped all of these for a profit. So AMZY, APOY, FBY, NBDY, Tesla, you'll see is not showing as attractive right now. It's a little bit above its 52-week low, so it did rebound. Got some of the other Mag 7s just to kind of watch. Also got some REITs. Real estate we saw was holding up pretty well. We're still long on land, although again in the sell everything market it went down too. So land, LTC, Stag, etc. You see everything pretty much down on Friday. MP Materials, similar thesis. We've done several videos talked about MP Materials. Again, it's held up pretty well. Again, this is a US-based rare earth materials mine. So again, this one that has outperformed recently and may be an opportunity again. We again like the long-term thesis on MP. MSB is a steel company, again, held up pretty well. JEPI and JEPQ, very popular dividend payers. You see they've held up. We'll look at those again in our dividend payers Google Sheet again. Here's SVXY, again, added that to our shopping list so we can watch that. Whenever we get a spike in the VIX, take advantage of SVXY. Here's USOY. Again, you can also see the dividend information for our shopping list stocks, ex-dividend dates, again, earnings dates, optionality, PEs, ATRs, etc., if applicable. So again, one-stop shop for your shopping list stocks. Wheat, we're still long on wheat. So you see it's held up, kind of bottomed again. We saw that yesterday. Others that we're keeping an eye on is uranium. So URA, we would trade URAX, which is the leverage long on uranium. So you can see URA is near its 52-week low as well. Again, I have a little bit of concern on tariffs. The highest holding in URA is CCJ, which is Canadian. So we'll have to keep an ear out to hear if there's tariffs or if they get excluded from tariffs. The Canadian uranium producers, most of the uranium producers are The profitable ones are Canadian. So again, very important to hear if they're going to tariff uranium or not. If someone knows or has some insight into that, that would be great. That is one we're interested in, is URAX, to trade uranium, a rebound in uranium. Also, whenever we have these big dips in the market crashes, we're always looking at BTI, which is a broad index on the market, including international. So the 52-week low is 244. So if the market dips and BTI dips to about that 244 range, we may buy a big chunk of BTI, wait for the rebound in the markets. Again, one of the reasons I like VTI is it also includes international exposure, whereas VT or the SPY or the other just S&P based funds are pretty still heavily weighted to the Mag 7, and they're very US based. So again, if we think some international markets may hold up better than the US in the near term, then I like VTI. And again, if it dips to at or below the 52-week low, we'd buy a chunk of VTI, wait for it to swing back up, might scalp that off as a source of funds, and may look at these yield maxes and the Mag 7s again when they bottom and start to bounce back up. So again, that's kind of our near-term strategy. Watch our shopping list, look for an opportunity in BTI, and then see which of the Mag 7s may be less susceptible to tariffs, like Meta. Doesn't really have a whole lot that's exposed to tariffs and not really in China, etc. So again, we might be looking at FBY. FBY. We were watching that, so that's why that's in our shopping list as well. So that's kind of my near-term strategy. Wait for the market decline, swing back up, maybe go in a broad index fund, and then look for laggards where we can get price appreciation plus monthly dividends while we wait for the market to recover. You can also see Disney starting to get a little interesting. So it's close to its 52-week low, and you'll see on our puts ROIC Google sheet, maybe we'll sell some puts against Disney, or maybe we'll buy some shares. So Disney's also looking somewhat interesting right now. So let me know what you all think of these shopping list stocks. There's others that you think are good general buys for downturns in the market, irrational reactions like we've seen to the tariffs, etc. Anything we should add to our shopping list, and we could take a look at that. Okay. Grab a drink and we'll look at dividend paying stocks. So in addition to our swing trading stocks, we also use dividend payers to generate income while we're waiting for our swing trading stocks to set up. And we use our dividend payers Google sheet to create our schedule of dividend payers with the total return, the risk reward profile, the category, the dividend payment schedule, etc. that we would like. So again, you can get 24/7 access to our dividend payers Google sheet. Use it to create your own schedule of dividend payers by joining our Patreon. So let me grab a drink. If there's anyone in the chat that has a particular dividend payer you'd like to look at, I'll try to keep an eye on the chat, and we can take a look at those dividend payers as well. Okay, again, if you have a particular dividend payer in the chat you want to take a look at, throw those up. I'll try to keep an eye on those. You see there's going to be a lot that show up, steep decline. So you've got a lot of dividend payers close to your support level. Again, we're using the total return. We want to see a total return of 5 or better. So a lot of these have gone negative with the decline in the market. Let me show you the USOY one. We've talked about it. That's a monthly dividend payer on oil. So you can see that one. Compare that. We used to use USOI, which was the Credit Suisse. And you can see USOY has a very nice total return. It's a monthly dividend payer, last paid 80 cents. See that USOI has gone negative. So that's why we switched to and bought USOY for the monthly dividend, waiting for oil to swing back up. See also if you want to just collect dividends on uranium, although that's just an annual dividend. Also, I talked about SVOL, which is a monthly dividend payer on shorting volatility. I did take a look at that one. The risk reward isn't support and resistance, even 52-week isn't that great. And the total return is showing negative. So I wasn't as hip on jumping into SVOL, although again, that's one where you could then collect a dividend benefit from a decline retracement in the VIX. Did see a run up also in treasuries, so you can see this TLTW is now showing a positive total return. It's a monthly dividend payer on treasuries that might be of interest. Also talked about IEF or JEPI and JEPQ, pretty popular ones. I want to look at VTI, but you can see right now they're showing negative total returns. They do have a positive yield. They are pretty close to their 52-week lows. So you can see the risk reward profile. Again, you can compare the risk reward profile of all of these dividend payers in our dividend payers Google sheet. MJ, again, we've talked about cannabis. You can see here's METC, again, steep decline in price. So it's got a negative total return. So not that great from a dividend payer standpoint. Again, we're looking more for price appreciation. A lot of these bond funds show positive, so you can check those out. Also, some other popular bond funds, IEF and IEI. You can see their total returns very low, but they tend to be pretty stable. So if you're looking for stable bond funds, IEF and IEI are pretty popular. And to show VTI, we probably have VT as well. I guess not. Probably in our research, in our ad sheet, VT, you can see VOO. So actually, VOO's got a little bit better total return, but again, doesn't have that international exposure. So VTI total return's only 4. So again, not that great from a dividend payer standpoint, which again is why we want to wait to 52-week low, a bottom, and trade the price appreciation on the broad market. Again, you can also see all the yield maxes we watch, their total return, their ex-dividend dates, etc., in the yield max sheet. So again, we can watch all the yield maxes in our yield max sheet, the ones we prefer, also in our main sheet. Also, you can find the distribution, the link to the distribution schedule for the yield maxes in the reference sheet of our dividend payers Google sheet. So again, I'm just trying to scan the chat, see if anyone else has any other dividend payers you specifically want to look at. You can see again quite a few. Take a look at, see what their total return is. See the total return on FBYs drop down. A lot of the bond funds, again, are showing attractive. You can take a look at those. A lot of the oil producers also, near bottoms. Again, we're going to kind of stick to probably the yield maxes on the Mag 7s and the index funds like VTI, etc. Here's some of the Schwabs. You can see those have a pretty attractive dividend. Might take a look at SCHD. That's on Dividend Payers. SCHG on growth. So those are showing a pretty nice total return. Okay, I'll leave this up. If, again, anyone else in the chat wants to take a look at a specific dividend payer, we can do that. Meantime, we'll jump to options. In addition to dividend payers, we also use several option strategies to generate income while we wait for our swing trading stocks to set up. Firstly, we sell covered calls against our positions when they're going up, buy them back when they're coming down. And we use our covered calls Google Sheet to do what-if analysis on our covered call strategies. And you can do likewise, get access, 24/7 access, or make a copy of our covered calls Google Sheet for yourself by joining our Patreon. So you can do what-if analysis on your various covered call strategies. And right now, market's declining, so we're looking at buying back some of the covered calls we've sold, and then rinse and repeat, generate our own dividends. Got a whole series of videos on how you can use our covered calls Google Sheet to help you with your analysis of your covered call strategy, which you can access via the links to the videos in the notes. Secondly, we sell puts when stocks are going down, buy them back when they're going back up. And we use our puts ROIC Google Sheet to identify opportunities to sell and then buy back covered, or sell and then buy back puts. And again, you can also use our puts ROIC Google Sheet to help you make money trading puts by joining our Patreon. Got quite a few changes to our puts ROIC Google Sheet, so let me grab a quick drink and we'll talk about some of the enhancements and updates to our puts ROIC Google Sheet. Okay, with the steep decline in the market at the end of this week, we had a lot of stocks breaking down below their strike prices in our puts ROIC Google Sheet. So I've updated those and I've listed the updates in our notes documents. I'm not going to go through all those again since there's so many. So you can see the ones we adjusted down, again, that it broke down below their strike price. These show up in red in their strike price column if their strike is below, or if the current price is below the strike we have listed, so I can easily identify those that have broken down below their strike and then make those updates accordingly. So you can again see the whole list of ones that have broken down below their strike price and have been adjusted. You can see where I put them now. I did rerun our automated system to recollect the options data based on the updated strike prices and update our puts ROIC Google Sheet accordingly. So all of the data in our puts ROIC Google Sheet is current as of Friday. Additionally, I added conditional formatting on the delta column to show in red if the delta is less than -30. So part of our criteria is to have a delta, essentially a probability that that put's going to be exercised of less than 30%. So we're looking for a delta that's greater than -30 or less than the absolute value 30. So I wanted to start highlighting those that have a delta, a probability of getting exercise greater than 30. I have not updated those puts yet, but again, that's what we'll be using going forward to identify those that may be at higher risk of being exercised. So you can see we've got Disney at 80. It's got a reasonably attractive ROIC. So at that 218, it's only, let's see, 2.6%. If it were to go to 4, it would have a 4.8% ROIC, so still not our 5% target. So we'd be looking for a premium on that, higher, although again, the probability that get exercised is greater than 30%. So we might be looking at lowering the strike price on Disney below 80. So, and see if the premium is still attractive, or maybe it's a good time to look at buying some shares of Disney. So again, comparing the risk reward profile, buying shares versus selling puts. And again, you can use our puts ROIC Google Sheet to also do that. You can see the support and resistance. So I guess I'll have to update that as well. So right now in our main sheet, you can see selling puts on SOXL at 7 has pretty attractive. We saw that steep decline in semiconductors. So if you don't want to buy shares of SOXL, maybe selling puts on SOXL. Also selling puts on TQQQ. So you could compare the risk reward profile of either buying SQQQ, which is the short on the Qs, versus selling puts on TQQQ. So again, either strategy, whichever has the best risk reward, whichever you like. I guess selling puts gives you a little more leeway. Might not get an exercise. You can collect the premium, keep it. We look at our research sheet. Again, I updated both sheets with the highlighting and the delta. So now you can see ones which may be at higher risk of being exercised. If you don't want them to be exercised, you might want to avoid those that have a higher delta. So you can see the ones that have over a 5% ROIC highlighted in green. Again, now you can see their delta, probability they're going to get exercised. Again, quite a few that have that high delta. So again, we'll be looking at potentially adjusting their strike prices down so that the delta is 30 or less, probability of exercise less than 30. And then we'll see what that does with the ROIC. So again, plenty of opportunities with the steep decline in the market, the pop up in the VIX. Selling puts is good strategy right now. So you look through our puts ROIC Google Sheet. You can again balance the ROIC versus probability of exercise. Decide which you might find attractive to sell, and then if you think they're going to rebound, you can buy them back cheaper, keep the premium. So again, selling puts right now is in the down market with the high volatility. Pretty good strategy. We'll again be looking at opportunities this week if we continue to get this downturn in the market, see if there's some relatively safe puts that we could sell with stocks that we wouldn't mind owning. Again, that's part of our criteria is, stocks we wouldn't mind getting assigned. We can use the wheel strategy, either sell them for a profit, do they swing back up, sell covered calls against that position, collect additional dividends, and rinse and repeat. So again, if there's anyone that wants to take a look at a specific put, specific stock, again, we talked about Disney, maybe taking a look at. I don't have any others right offhand. And I'm looking specifically at selling puts, but we'll go through this list again, possibly adjust some of those high deltas back down and see if they still show attractive. Also, I'll be rolling the expiration dates to May. Once our window, we use a 40-day window. See, that's almost breaching the May expiration. So after Monday, I'll probably roll those all to May, recollect the data, and see if some of those puts are attractive for May. Again, if you'd like us to plug in any puts, collect the data, have our automated systems collect the data on the puts, add them to our puts RIC Google Sheet to our database. Let me know the stock, the strike price, expiration date, etc. We plug those into our automated systems. They'll collect the options data, update our puts ROIC Google Sheet at the end of the day, and then that can assist you again with trading puts. So let me know if there's any specific companies that you want to talk about. If you have any questions, see Gerald's asking, what's the first thing you're going to buy when the markets come back? Again, we've mentioned our initial strategy, depending on how far the markets go down. We might buy a chunk of VTI, and then we'll be looking at some of the Mag 7 yield maxes, and then see where the risk reward profile of some of our other stocks are. So again, initially, we talked about uranium. I'm particularly interested in seeing if uranium holds up from the tariffs and swings back up. I think longer term, with the energy needs from data centers, etc. I like the uranium theme. Also, URA does have like Oklo, which is one of those modular nuclear companies which had benefited from the data center AI hype and then declined when that bubble burst. So I like URAX, but again, we want to see a bottom and swing back up. Again, BTI, when the whole market bottoms and swings back up. Also, international markets we've been talking about. If we figure out some international markets that may be holding up with the tariffs, but again, with all the retribution, reciprocal tariffs yet to be announced, once that stabilizes, maybe we can find some international markets that will be trending back up. So again, we'll have to see what the ultimate impact of all these tariffs are. Again, you heard my thesis also from yesterday that I expect, a downtrend in the market short term, possibly a bull rally, maybe into June, July, and then probably another downturn with recession fears into the fall, winter. So when we get that pop, I think people will head back into the Mag 7s, particularly those not impacted by tariffs. And so again, we'll be looking at those yield maxes on the Mag 7. So that's my humble opinion. But again, we're long-term swing traders. We have other traders in the chat that are much more nimble, looking at shorter-term scalps. So you can benefit from the leveraged ETFs, short on the downtrending. Momentum headed down right now, and then when you get a reflexive bounce, you can use the leverage long, scalp that off, rinse and repeat. And again, when it rolls over and heads back down. So okay, and Easy Mike, Katon. Again, we've been talking about natural gas, very volatile. So LNG, he's talking about. Also, if you're nimble and non-risk averse, boil, long, cold, short for natural gas. We talked about Brazil yesterday, held up pretty good, had the minimal tariffs. So we also talked about several of the other international markets. We'll be looking at those, keep an eye on those. So if you have any further questions, if I missed your question or a stock you want to look at, I apologize. Please put those in the comments to our video or in our Discord. Our Discord is free to join. You can get access to all kinds of channels, talk about different trading different asset classes, using different trading platforms, different trading styles, 24/7 with your fellow BeachBum traders. If you have a question for us, you can tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, etc. So again, if you have any questions or stocks you want us to take a look at, please tag us in the Discord so we can take a look at those. We'd also love your recommendations on what we can do to improve our weekly trading game plans, any of our other videos, tools, our Google Sheets, our community, etc. Please let us know what we can do to continue to add more value for all of our fellow BeachBum traders. We hope that you like this content. We hope that you'll do us a favor and smash the like button on our videos. Help us try to get the YouTube algorithm to someday show us some love and share our content with more traders around the world. We really need and appreciate your help if you'd share our content directly with your fellow traders, repost it on your social media sites, etc. Invite your fellow traders to join us in the live chat, join us in the Discord. Help us to continue to build the BeachBum trading community for the mutual benefit of all of our BeachBum traders. Otherwise, again, we hope this all helps. We hope we'll see you back again next weekend for our next weekly trading game plan, 10 a.m. on Sunday or Saturdays for part 1, 10 a.m. on Sundays for part 2. And in the meantime, good luck and have a great trading week.